Thank you. Slightly different title, but same project. Um, yeah, this is a joint project with Abhishek down here. Stand up and say hello, Abhishek. Abhishek is our RA, and it's the joint work with my colleagues from Queens, Fergal and Jesus. And essentially what we're doing is looking at a responsible deployment and rigorous evaluation of can we trust AI to automate regulatory compliance. I guess, the promise and the reality. I think it was the FCA report and another industry report give this rather large ballpark figure of what compliance costs annually. And then from the FCA themselves, they give a nice estimate of per check, 200 to 500 pounds per submission. And the FCA themselves, they're regulating over 500,000 firms a year. So this is clearly the real burden. And then we have the AI promise. Automated compliance checking, instant regulatory interpretation, and this sort of large reduction in the costs of compliance. We ourselves did a little piece of work in 2013 where we looked at the venture capital data from PitchBook. We pulled out a number of insights, but one of the interesting ones was that within fintech, regtech deals, there were fewer of them, but they were much larger. So I guess the implication here is that there's some serious fixed costs to deploying AI in regulation. But again, can we trust the AI to help us here? And the reality check here is, can AI accurately extract regulatory requirements? Does AI know when it's wrong? And which regulations can we safely automate? So yeah, our overall research question is, can AI safely automate regulatory compliance in finance? We looked at there's actually quite a rich, extensive literature. There's some legal scholars in the room will know this in computational law. So the AI and law research community are increasingly calling for sort of a rigorous evaluation of real systems with actual legal text data. And that's what we try to do. The research question is quite a generalized question, but we focus on a subdomain of financial regulation, and one of the allegedly simpler types of regulation, which is investment fund classification. And we look at three things really. We look at accuracy. How well do different AI architectures extract structured rules? I'll talk a second about the number of models we look at. We start with the 80s poster boy of AI, the symbolic knowledge graph or knowledge engineering. We move across to neural network type models and hybrids in between. We also look at reliability. Can AI systems tell when they're wrong? And which regulations can be safely automated? And yes, as I said, we do this over actually 7 architectures, the symbolic AI graph, and 6 neural network architectures. And we use a holdout set of about 36 of these rules to test our models. Okay. So, yeah, a nice way to frame this, I thought, was coming back to the computational law scholars, and they say that we can distinguish law or computational law across a spectrum, from law as code, like purely symbolic, to law as data, where you're using statistical pattern recognition. And we have a number of models here, starting from the left all the way to the right, from purely symbolic knowledge engineering, Graph AI, GraphDB database. And what we find is, interestingly, our Similarity scores here are quite similar across all models, although the symbolic AI does seem to be a clear winner in our study. There's no real simple AI win story here, though. While we find that the GraphDB is a clear winner, both across the structural similarity, which the graph edit distance is a measure of structural similarity, and the lexiconic similarity. We find similar structural scores across our hybrid models, even all the way over to our chain of thought model. So there's a real trade-off, we think, between costs and processing complexity. So the cost is clearly symbolic AI there's no easy way to do that. It's hard coding, it's work, and probably speaks to some of those fixed costs we see in those venture capital numbers. So I guess our second interesting finding was when the LLM type models, the neural network models, have higher confidence, it coincides with more error. So we discovered this kind of inverse calibration, where what you would expect is, and we pull confidence scores out of the LLMs via the log probabilities you can extract. Higher confidence should have higher accuracy, but we actually find the opposite in 4 of our models. So we think this is quite an interesting novel finding. And I guess the legal scholars would know this well, the ambiguity reality. Ambiguity isn't a bug in legal text, it's a feature. It's how regulation works. It allows regulation to be flexible, to move with the real world. And we think that's a really interesting finding also, and it sort of informs where we're going with this project. I should say this project is with a fintech in Northern Ireland called Funds Access, who are probably one of the oldest fintech firms, certainly in Northern Ireland. They were incorporated in 2008, and this is their wheelhouse. They supply fund compliance services. So moving on to the next slide, please. So I guess our broad solution here is to not avoid or automate ambiguity, but to root by rule ambiguity, not model confidence. So this idea that we can, and we have an ambiguity-aware type AI architecture within our modeling, and we can tier this. And so very much in a responsible, the human and AI working in unison here. If you can move on to the next slide, please. And of course, being a finance guy, an economist by trade, and understanding the economic impact here, we did a rough back-of-the-envelope type calculation. So within our rule set, we can automate about 40% of the rules. We can use AI with a little bit of human validation for 20%, and then purely human validation for some of the higher risk ambiguity rules. We use human experts there. And we come up with a rough cost of about $90 per submission. And these are just API cost figures that we've abstracted up or abstracted out. So we think there is a significant saving in this very rough solution of a truly manual approach to this sort of graduated automated approach, while ensuring we have these safe properties here at the bottom. We're really avoiding trying to automate the high risk ambiguity. Okay, so I guess 3 big takeaways. And our project is nearly finished. We have another month to go and a few more results. We're actually going to run our models across a set of FCA rules in the same subdomain to give us a bit more rigor in our analysis. But so far, we think, AI can't really tell, and we all know this, the sycophantic nature, it's overconfidence, but it's nice to calibrate it in the numbers here. AI can't really tell when it's wrong. We have 4 out of our 6 architectures that have this negative correlation. So the more confident they are, the more wrong they are, at least in our experiments. Ambiguity is fundamental. It's a feature, not a bug, of regulation and legal text more generally. And we think that a graduated automated model is the most responsible and interesting way to do this. And that's me, unless we're going to do a duet, are we? No.